All right, good morning, all you wonderful individuals out there in the land of the YouTubes. How's everybody doing on this fantastic Tuesday morning? It is February the 14th. Happy Valentine's Day to all of you, as well as happy CPI Day to all of you. We're going to take a look at a few assets, Bitcoin being the number one asset that we pay most attention to. And then obviously Forex and stocks. We're going to see if we can't find a position today. But here's the thing. As of January the 1st, the BLS has changed the way that they analyze the the CPI data. So you can see here that there was a revision. So if we go over to the chart, because the chart is the most important aspect of what we do, let's take a look and see if the chart represents that revision. And there you go, 6.5. So it does not. All right, it does not. Previous, it says 7.1. That's the revision. Last month, we did the CPI live. So we traded it live. We watched the live news drop, and it was 6.5%. So the chart does not yet show that revision, but they have revised it to 7.1. There was a change in how the BLS does it, and I'm not going to go over all of that. If you want to understand what has happened, all you have to do is just look up BLS and CPI, or type in new changes to CPI slash BLS or something like that in your Google search bar or whatever browser you use, and it'll pull up the information for you. They're going to look back 2 years, I guess. So that's going to change things, which means it could potentially bring in a hot number. So if they're looking for 6.5 now, then according to this chart, you're going to, if we do hit 6.5, you're just going to get a sideways tick. And a sideways tick is in line with stickier inflation. The reason I'm bringing all of this up is because there is an underlying narrative out there in the marketplace. Some people believe that the narrative is bearish. Some people believe the narrative is bullish. You've got sticky inflation being the number one risk factor for all of 2023. So basically what that means is if we do just trend sideways on CPI or start to ascend again on CPI, then the bearish narrative will return back to the marketplace, and you will see that in the charts. However, if CPI continues to do what it has been doing since the high back in June, which is trending lower, we believe that stocks will go higher. This has been the format to which we have been applying risk to the marketplace here in this community. If you are new to the channel, welcome. If not, welcome back. You are future legends. If you are here, if you are trying to learn how to trade, if you're looking for a strategy to trade the markets profitably, looking for a way to analyze price properly, you are in the right spot. And I am so glad that you have found the channel. All right. So yeah, let's go ahead and get ready here. We got 5 minutes until that information comes out. So what are we looking at here? All right. Well, as you can see, the S&P 500 trending up on the day. Your intraday volatility, you're basically at the highs. I don't know why that indicator is even on. You are at the high of day right now. Last hour, you made a fresh daily high, and currently you are trading above that fresh daily high. Yesterday, you made a higher low and a higher high compared to the previous day, which was a bearish day. So it does look like a reversal. People that look at chart patterns will refer to this as a head and shoulders formation. We do not trade patterns here, but we do look at the last 3 days, and order flow as of right now at the beginning of the week is bullish. You guys know, if you've been following me for any length of time, that the false move is usually early on in the candlestick's life. Now, it doesn't matter what time frame it is, it plays out the same across all time frames. So if you're looking at a daily, usually the first few hours of the daily range is the fake out move, then you have your expansion, and then at the end of the day, you get consolidation. That's how candlesticks play out day after day after day. There are only 3 kinds of candles: trending candles, inside candles, and outside candles. And for the last few days, you've had trending candles to the upside. We typically don't want to see this happen at the beginning of the week if we are bullish. And secondly, we do not like to see this on a high impact news event driven day, simply because since today's Tuesday, the marketplace, depending on if it's trading at the lows of the week or at the highs of the week on Tuesday, that could indicate it doesn't work all the time. Nothing in trading works all the time. But we do have data that suggests it happens more often than it doesn't. Roughly more than 50% of the time this occurs. Then that could indicate that we're going to see a bearish move off of the CPI numbers. Now, the way we could play that would be to look for a short entry on Bitcoin. This is for a day trade only, as I am bullish on the asset. All right, let me say this one more time because a lot of people in the community are confused. I am bullish Bitcoin. I own spot Bitcoin. I am holding long positions currently, but I am a day trader. So I take advantage of intraday and intra-week opportunities just to accumulate more Bitcoin. So when I'm shorting Bitcoin, I'm doing it on an inverse swap contract, which means if I make money or if I'm correct on my directional bias or on my trade, I get paid in Bitcoin. All right. So therein lies my risk. I am using Bitcoin and I am only risking Bitcoin. Okay. So I am ultimately as long as you can get. I love Bitcoin. I think it's going to be worth a lot more money in the future. But with that being said, I will take short opportunities. Here is the numbers. Right here on the white line is your high of the week. You can see that you did not take that out yet. If you're going to see a move lower, I'd expect a run above the high and then a drop down to daily support or the weekly open. So a spike above here and a run back to there. And there it is. Boom. Dunzos. In, out. You did not get a liquidation, however. So, did not get triggered. You got a liquidation on the last hour, but I had a limit order setting above that. Let me check the Bitget account, make sure here. Yeah. Yeah, I did not get filled. Mother flirkin'. This is the second time this has happened to us. This happened on an FP as well. non-farm payrolls. We're looking for the liquidation above the high, create a fresh weekly high, and then roll over. These were going to be primary, secondary profit targets because this is your weekly range, right? There's daily support, which is clearly held. So does it hold today? Let's see the numbers. Right there. So they did come in line. They came in 6.2 was expectations. We got 6.4. Oh, higher than expected. Higher than expected by 0.2% or 0.2%. So the market's taking that bearishly. This will probably be a buy the dip event. As long as you are closing daily candles above 21,628, I don't care how today plays out. I don't care about this move right here, this initial trade. That's just what we were looking to trade. On the high event risk days, we look to trade the MOMO or the momentum, if you will. It's a very risky strategy, but I mean, coming into the day, we knew we were looking for the high, right? We knew we were looking for that, and we had a profit target of down there. You could see how that played out to perfection. But I did not get filled because I had a limit order setting above the high. This was the weekly high. My limit order is setting roughly right in there. So I wanted to see a spike up, fill me, drop down instantly to 21,628, which was where my profit target was. That's where I would have been exited on the position. The reason I don't look for anything lower than that is because that is support. Now, you do have an inverse head and shoulders pattern here on the intraday on Bitcoin as well. So before today, you can see here, before today, you do have a lower low and now a higher low. So I honestly believe that this isn't going to change anything. I think that this is a buy the dip market, and I think it's going to continue to be a buy the dip market until we have obvious data that suggests the CPI is going to indeed, or inflation is indeed going to be stuck. We do not want inflation to get stuck, but we can't use this month's data or last month's data because they change the way in which they interpret their information. You see what I'm saying? That's why not really a big deal, I think. But ultimately, we'll see how this plays out across the entire marketplace. Usually, you get the move on the CPI. You can see you did get a stab higher there on the S&P 500. Very big wick to the upside. That's kind of what we wanted to see happen on Bitcoin. It did not. But straight down, made a fresh daily low. And now you're trading back up around the highs of day. So a lot of momentum in here. Excuse me. This strategy is a risky strategy. It is not for the faint of heart. And it is definitely not designed for people who do not know how to control risk. Or manage risk, I should say. Not control risk, but manage it. Typically, we're not risking a lot of money on these trades because price is so volatile. It's moving in gigantic leaps and bounds, and that basically opens the spread and makes price just crazy and across the board go all over the place. But if we look at the S&P 500, well, this is the NASDAQ here. You can clearly see a pullback and a couple bullish days. Now, I am in the buy the dip mentality, so we're looking for supports to be buyers and an uptrend. That is how we trade this. You are in an uptrend, regardless of what you may hear across the internet. There's a lot of people out there that is still calling this a bear market, and you are not in a bear market, not as of year to date. Okay? You are in a fresh year, so we're no longer in 2022. So 2022, what happened in 2022 no longer matters. It is no longer relevant. All right? You are in a higher interest rate environment. The Fed is raising interest rates. That is typically bearish. But you can have markets climb in a higher interest rate environment. It just depends on how is the economy. Is the economy strong? Is the economy weak? Are we in a recession? Are we going to go into a recession? Now, the inverse yield curve would suggest that we will be in a recession sometime either late Q4 2023 or Q1, Q2 2024. But the market is not pricing in a recession. The market is pricing in a non-recessionary event. So you've taken out major highs. You set your lows in last year, and all of 2023, you've just been going straight up. So pullback is what we've been looking for. We did get the pullback, so we'll see how today closes relative to the new data that we've just got. You get the data, and then the market's reaction to the data. And then we can make better investing decisions based on how the market interprets this data. Does the market interpret this data to be bearish? Well, you'll know that by the end of close today. Intraday, things can and likely will change, right? As people are making decisions based on things that are happening right now, not things that happened in the past. If anything, the market is forward looking, not backwards looking. But let's get the dollar over here on this chart, because there is important information to go over here on the dollar. All right, so we've had a bearish position on the dollar since October. That's where we thought that the dollar was going to top out. And essentially, that's where the dollar did top out. So we've been bearish since here. The dollar has been, in a sense, just trending lower and trending lower aggressively. You can see here currently the yellow line, that is going to be your yearly open. So if you're above the yellow line, you're going to be bullish on the year. If you are below the yellow line, that means you are bearish on the year. And if you are bearish on the year, then that means your current yearly trend is down on the dollar, not up. All right. Now, if you look at data this way, you look at past data, then you're going to say that this is a bull market and then a pullback. But I digress. Your uptrend has been broken. You've lost all of your major moving averages. The structure of this market on higher time frames is bearish. You've lost your 21 exponential on a weekly time frame. You have been using the 21 as resistance on every push up. Now, the reason that you've gotten a bounce here is because you are at a very important support. It is monthly support. Monthly support is a big support, and you've been trending lower for 1, 2, 3, 4 months straight. So 4 straight monthly candles closed bearish. It's natural that you get a bullish pop. I told everybody, and I have been telling everybody, that I assume that this is a selling event, not a buying event on the dollar. Now, I could be wrong, obviously. We'll know in time. As of right now, the sell side is winning out. You can see how price has traded straight to the yearly open, and it did it very momentously, I might add. So this was a bullish engulfing weekly. You can see there, that is a bullish engulfing weekly, or an outside week candle. Then the next week you got bullish continuation. As of this week on Tuesday, very early on into the week, you have already taken out last week's low. Boom, right there. Now, you are getting a pullback. So if you are going to be bullish on the week, if you're going to stay in line with the last 2 weeks trend, then I expect you should not trade back under 102.64. So if you are bullish on the dollar, or if you are looking for bullish dollar positions, you do not want to see it get back under there. 102.641. That is right here. Okay? That is a liquidation event. You just simply liquidated last week's low. So now, if you are going to see a breakout above the yearly open, I would assume that will occur now. If price continues to trend under 102.641 on a daily closing basis, then naturally my next bearish target would be 101.78, as I expect price to revisit monthly support. That is my bias. I am not, and think that we will not be trading above 104, but it can happen, obviously. This is the best way in the world to analyze price, as you do not need indicators, and you do not need to be able to identify trend, as trying to identify trend is so very subjective. It depends on where is your point A and where is your point B. So depending on where point A is to point B, that would be your trend. If you just keep it simple and go year on year on year, then it's easier for you to identify trend. Here is your yearly candles. You can see how simple it is, all right? 2020 was a bearish year. 2021 was a bullish year. 2022, very bullish year for the dollar. And here we are, 2023, as a little baby doji. We haven't even gotten started yet. This is February. But as of right now, you're bearish. So you want to look for bearish positions. How you look for bearish positions? You sell rallies. This is a rally. So basically what you're looking to do is you're looking to sell pops in price. When I say pops in price, I mean rallies. So you get your downside expansions. Usually you find support somewhere, and then you'll get a rally, or you'll get a few days where you go up. Well, that is where you're looking to enter your short position. I can't trade the DXY, but I do this through a myriad of assets on the Forex side. Any USD pair, for instance. And if USD is the base currency, or depending on whether or not USD is the base currency or the quote currency, will determine the directional bias trade that you are looking to take. Here on the USD JPY, you can see that I have a short position open. This short position is currently open at 151.79. That is the price at which I entered the short position. And ever since then, you have wanted to be a seller of rallies. Now, this trend to the downside, depending on if you use this swing high, has been broken, right? So a lot of retail traders will take that information and say, now that the trend is broken, we're going to look for buying opportunities. That is the wrong way. You do not want to do that, right? Do not want to do that. Your trend is down. Your trend is down. As long as you're down, you look for selling opportunities. Remember, the best way to identify trend is to use your year-to-date, YTD. Find your year-to-date opening price, and there you go. Right now, you are currently bullish on the year on this asset. Wait a minute. Yeah, right there. Right? Because you are above the yearly opening price. Now, I expect this to be faded eventually. It looks like it's trying to hold support, and you've been taught that this is buying pressure, that these wicks are buying pressure, right? So you're looking for it to go up. That is not the right way to look at these things. These would be targets to the downside. And this is going to be the next downside target for us unless support holds and you start to trend away from the 131.12 area. If you start to trade away from the 131.12 area, once you get above the 50 on the RSI, as you are now, you can start to look for buying opportunities. Okay? So that's how you simplify identifying trend. All right, so moving on. Right now, this thing does look like it is trying to find support. There's other things at play here other than just bearish dollar. The best asset to look to play the dollar is the Euro USD. And if you are bearish dollar, then that means you would be bullish this. This was very bearish last week. Traded right down to the yearly opening range. We got a close below the yearly opening range, and you can currently see that we are trading back above the yearly opening range. So as long as that is taking place, we will be looking for long positions. And in fact, we took a long trade on the euro yesterday. That position was entered right there, 106,774. Let me show you that entry, or I don't have the entry, but I'm going to show you this. Taking profits. This is where I took the entry. You can't see it. It's not very big. So let me go in here and show it to you. So this white line is daily support right in here. I was expecting this to be a fake out down below. So I was looking for entries as close to daily support as I could get. Intraday, we had an intraday support of 1.06745. This is my entry price right here. So my entry price is setting just below daily support. If I pull out the chart to the daily time frame again, you can see that that position is clearly in a profitable stance. I've already managed the position and taken profits and moved my stop to break even. So inherently, I am risk-free on the market. For example, on NFP, 3rd February 2023, I made pound USD, took profit 5 minutes before the day closed with a full position. Yeah, you can hold on to it. You can do however you want. I'm just teaching you guys how to analyze price for the most highest probable entries. If you're looking to be a consistently profitable trader, you must first reach consistency. Once you reach consistency in the way that you approach the markets, analyze the markets, and enter the markets, then you can work on becoming profitable. But consistency is key. Trading this way gives you that consistency. You're no longer relying on indicators, moving averages, things like that. Now you're just looking at price and price alone. And price is, the one thing that matters the most, right? Because we're looking to, if we're long, buy low and sell high. And if we're taking short positions, then naturally we want to sell high and buy low. So, and that all matters what the price is. Well, that's all dependent on what the price is, if we are successful in our position or not. Now, it does look like you have put in a top up here because you did break out and instantly sold off. And like I said, being this close to the yearly open means that we could still see some choppy markets. The trend is not set in stone yet. But like everything else, I do believe the first little bit of time, like Q1, for instance, will be the fake move. And then you'll see the real moves start to happen Q2, Q3, and into Q4. So there will be a lot of games played around the yearly opening price. But as long as you're subscribed to this channel, you will be on the right side of the market most of the time. All right? Depending on whether or not you are a day trader or an investor, it does not matter, as when I take my day trading positions, I am typically trying to take them in the direction of the overall trend, because I like it when a day trade turns into an investment, right? Not the wrong kind of investment, like where you buy Bitcoin at $69,000 and hold that throughout a 79% loss. I like taking day trades like this one. This was taken as a day trade. You can see now, since October, I have been short. That is an investment. And I will remain short on this position until I see either a trending move up off of the yearly open, as that could indicate that the downtrend is over, or I can take half off and leave it on. There's a myriad of ways that I can manage this trade. but this trade has already paid me, so I can't lose money on it. It's impossible for me to lose money on that trade. It is over and done with. So we shall see here what happens. People were calling this a bull flag. And yeah, maybe, but you're in a downtrend. So bull flags will typically work out better when you're in a bullish market and you're trending in the up direction. That's when you want to look for bull flags, not so much when you're in a down market and you're trending in a downward direction. So this, you have to look at this as a potential selling opportunity until you get visual evidence that you're wrong, right? Visual evidence that I am wrong would be a break above and start trending above, like I said, 104 and then 105, as that would indicate that I am probably on the wrong side of the trade. But as of right now, everything is bullish. US 100, NASDAQ, the Dow Jones Industrial, your S&P 500, all of them are structured bullishly. There is your low on the S&P 500 at $3,500. You're trading at 4,100. That's bullish, not bearish. You're trending above the 21. You just pulled back into the 21 a few days ago. There was a potential resistance, old resistance level there that you could have looked at as support. Would have provided a phenomenal buying opportunity. And we discussed that in depth on this channel before the move up, which is important, right? Which is important. We were talking about this being a buy the dip opportunity. On Bitcoin, I feel the same, as long as you're trading above 21,628. Now, you did lose your 21 on Bitcoin, but we've had a lot of FUD recently. You've got the SEC trying to take a hit or take a swing at cryptocurrencies. You've got other news going on where the federal government is literally trying to make it impossible for cryptocurrencies to bank with American banks. This FTX FUD, all of that stuff is like basically an all-out assault on the crypto market. But we've been right all the way, right? All the way. When we were down on the lows, we were calling for those to be the lows. And I was telling people that they needed to start looking to be a buyer on Bitcoin, not a seller, as the sellers made money in 2022. And we were among the sellers in 2022. We're usually ahead of the curve. Well ahead of the curve. My current bullish positions on Bitcoin, 16,530. This is my entry to the upside. So I did catch all of that rally, and it was posted on Twitter the day before I took the entry. The day before I took the entry. I posted on December 31st on the Twitter account that I was going to buy Bitcoin on the first day of the year, right there on Sunday the 1st, 2023. That is the first day of the year, and I bought daily support, 16,530. You can see quickly after that, the move went to the upside. I am not looking for this to be a bear market rally. I am looking for bullish continuation. Or choppy sideways price action. But nevertheless, I think your lows are in. I thought these were going to be the lows until FTX decided to put the kibosh on that. So thank you, Sam Bankman-Fried. Hopefully you spend the rest of your life in prison. Good morning, everybody. Good morning. Good morning. What does the Patreon sub offers, please? Okay. Typically, I don't like to talk about the stuff like that on the stream, but I will if I'm asked. Patreon, I have set up for donations only. This is not a business for me. I am a trader, first and foremost. But if you want to donate to the community, then you have 3 different tiers. You have the first tier, which is a $5 a month tier, will give you access to a live stream that I do every Sunday morning at 11 a.m. Eastern Standard Time. And basically, what we do is I answer any of your questions about anything, whether it's regarding strategy or if you want me to look at an asset, find places to look for opportunities. And I usually discuss what I'm looking for in the week to come. So it kind of gives people an idea before the week starts what I'm looking for, how the week to play out, if you will. And then the $25 a month is for the Discord. If you want 24/7 access to be able to DM me and ask me questions 24 hours a day, 7 days a week, then you can sign up for the hedge fund tier on Discord for the Discord server and surround yourself with like-minded individuals and all that. But it's basically just, it gives you access. In the Discord, I have several study charts and videos and things like that to help you with the strategy to learn exactly what it is that I'm doing on a day-to-day, week-to-week, month-to-month basis. It just basically gives you all the tools that you need in order to do this for yourself instead of needing to rely on me to get your biases. You can rely on yourself, taking your own entries and all of that. Occasionally, I do post trades and trade ideas in the Discord, but it is not a signal service. I must say that. If you sign up for the Discord, please do not expect it to be a signal service. It is not. I do not provide signals. I answer questions and I provide the occasional trade setup. Occasionally. Because you must look, I mean, the best way to learn is by doing it, right? You got to do it to learn it. So I understand that. And when I see a phenomenal setup that I like, whether it's a day trade or a longer term swing trade opportunity, then I post it inside of the Discord. And we have a lot of really good people in there that are on top of like big things. For instance, Ray is the one that even brought it to our attention that the BLS was going to be changing the CPI numbers and the way that the way that they come up with the data. So, I mean, it's less than $1 a day. I think that you get that value inside of there. I have people that have been with me since day one and they're still in there. So obviously there's some value. And some people don't find any value. It's up to you. It's not a business decision. It's just simply, answering questions takes up a lot of time. So obviously I monetized it. But this is the price that we are currently watching. So if you're watching the live stream today, then you know that I am looking for bullish entries in this area as long as we are not closing daily candles under it. So what that means is if you're brand new, we were looking for the same thing here, right? As long as we were not closing daily candles under this price, we were watching it for bullish entries. And you can see on this day here, you had a massive breakdown. So naturally that told us that we were wrong to look for bullish positions there, right? Price always lets you know when you're wrong. This area is an area that I've been looking for potential support for a while, based on this level here. We did get a weekly close under that, however. See this? Damn it. Right there. We did close under it. So typically when that happens, it makes us set on our hands more. So because you did break down below what could have been support. This is a resistance level. It is not a support level. It's resistance. So, but resistance does sometimes act like support and can act as support. But that's the main area that we were watching on the higher time frame. There is a 21 exponential moving average coming in a little bit lower on the weekly. And as long as you're trading and closing above this yellow indicator here, I think you're good to look to buy the dip. This is a technical dip. Your pullbacks are dips. Finding the support or finding the area where the market turns around or is going to turn around, that's usually the difficult part. That's why we drill into the smaller time frame charts. So right now, this is the key price that we are keeping our eyes on, 21,628. If today closes under that, then we will wait for the next bearish close. And then we will watch how price reacts around that. Right? There is an old supply zone here. And an old supply zone here. So naturally, a little bit of consolidation in and around these two areas is to be expected. And I mentioned all of that in Saturday, not last Saturday, but the Saturday before last's upload. Last Saturday, I didn't really see much to discuss because we were waiting for the pullback. We are getting the pullback now as we speak. So now what we're waiting on is we are waiting on clear and obvious support to reveal itself. And so far we may have that. Right? So far we may have that. So what we can do is we can watch smaller time frames, like the 4 hour, for instance. Notice how you got a close there at daily support, a close here at daily support, a close here under daily support, and then instantly bullish reaction out of the where or out of there. This is the first time you're pulling back into this region. This is known as a demand zone. So if buyers are going to step up here, I would not want to see a 4 hour closure under 21,628. Our next 4 hour closure comes in 1 hour and 49 minutes. Heath, I would really like to thank you for your education. Finally managed to learn and get a couple of Bitcoin shorts on the Bitget inverse futures. Can't thank you enough. Cheers. Just love this channel. Thank you, my friend, for being here. I really appreciate it. I appreciate all of your guys' time. I understand that you guys have your own lives, and sometimes these streams get pretty long and I speak slowly and all that. But the information that's provided on this channel is the best information that you're going to find in the entire world. On the entire internet, you will not find a better channel to learn how to analyze price than this one. That is a fact. And a promise. As we are always, well, not always, but usually on the right side of the market. But the links are in the, as always, as like every other YouTube channel out there, the links are in the description. All the relevant links. Yeah, so we're going to be watching 4 hour here. It's the daily support, but we're going to keep a very close eye on that price. As I think if this area holds, it could ultimately end up being a buying opportunity. But we will be watching the overall market. Just because we're getting this move here now, when the market opens at 9:30, that's when you're going to get the last part of volume for the daily range. So this move could be faded, right? This entire move could be faded. Nice hourly support right there on the S&P. Nice intraday support there on the Dow Jones. And you have currently trading under your NASDAQ support. You haven't closed under it yet, but it does look like you are trying to. The Dow Jones is the asset that is structured most bullishly out of all of them, as all of your major moving averages have completely arranged themselves into a bullish state. So if I pull them up here and show you, you can see that all of the moving averages are trading where they should be. All of them have crossed one another. All of them have gotten together the right way. And as of now, you are starting to see space get wider and wider inside of the 100 and 200. That just indicates trend and strength of trend. The wider it gets, usually the more volatile the asset is until you get that trend change. And you currently have that on the Dow. Now the Dow is into massive resistance. That's why it is struggling up here. There's no doubt about it. But your yearly opening price on the Dow Jones is $33,336. As long as you're trading above that, I think the marketplace is bullish. Now you will get intraday chop, intra-week chop, as the market, decides on what it wants to do from now. And it's for free. Yeah, you don't have to pay for the Discord. I don't hold nothing back on these videos. You can get all this information just by watching the videos. Yeah. Fantastic. The Dow is now bearish on the day. like I said, it's basically because CPI came in hotter. We knew CPI was probably going to come in hotter because of the revisions, the change that took place. I don't see anything that's like really, really bad here. So there is a very good chance that, yeah, once again, this could get faded. You could absolutely see buyers show back up. Pre-market, it looks like the sellers are here. Bitcoin's down on the day, but it's not even down a whole percent. Ethereum is actually still bullish on the day. It's trying to break down. And something of note here on Ethereum, you did break down and close below support yesterday. This was support. It was holding, 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 and there's the breakdown. Currently, you're using the 200 exponential as resistance on Ethereum. So crypto still has work to do to structure itself bullishly, but your yearly opening range is all the way down here. So you're still structured bullish on the year to date. Remember, we don't care about what happened last year. We do not mind what happened last year. It's a brand new year, ladies and gentlemen. Friends of all people, we are in a new year. This means that we look for new opportunities. Investors are going to be positioning themselves in different opportunities, different ways to make money. There is one guaranteed way to make money in the marketplace right now, and that's to simply buy the 3-month bond, or the T-bill, if you will. And you just got to wait 3 months for it to exercise. And it's a guaranteed 4.6%. So if you got a lot of money and it's just sitting around and you don't want to tie it up in, say, something like a 5-year or a 10-year for a measly 3 or 4%, you could just buy the 3-month and get 4.6%. The 3-month and just wait 3 months. 5%, 3 months, that's not bad. You get 4 quarters a year. Do the math. So all year, as long as the interest rates stay the same right now and everything stays the same, you could beat the S&P 500 just by buying T-bills. Almost 5%. Quarterly, 5%. That'd be 20% on the year, ladies and gentlemen. 20% on the year. Gains. Risk-free. If you want to do it that way. And a lot of investors, hedge funds and things like that are buying the bonds. Treasuries. Because of that simple fact. You don't have to wait so long in order to get paid. You're going to get 4.6% every 3 months. Free money. I know 4.6% don't sound like a lot, but at the end of the year, it will be a fantastic gain. But that will be dependent on if the rate stays that high. But it is fixed. It is a fixed income strategy, obviously. So once you purchase it at that rate, it'll stay that rate upon maturation. But obviously the next cycle or the next quarter, the maturation, the percentage could be lower. But I mean, it's free money, right? Free money. Risk-free money. Let me make sure we don't have any important questions as we wait for the market to open. Good morning, Heath. Good morning, Danny. Yeah, Danny's been making fantastic progress, and they're a member. They're just a member of the community. Been doing awesome stuff. Jay Bradley, good morning, my friend. Freestyle, yeah, I always only do it freestyle right off the top. I don't write nothing down. Come straight off the top, baby. I shoot from the hip. I took off work for this. Wow. Thank you, Kyle. That's amazing. Good morning, Tom. I'm short Euro USD. My entry is 1.07614 with a stop bet. Maybe my target is the close of today. All right, Danny, you are exactly in the opposite position as I am on this one. Depending on when you took the trade, obviously, will determine profitability or not. You did not tell me when you took the trade, so let me look at your entry. Alt H. $7,758. All right, so you had to take the entry last hour because you couldn't have shorted it yesterday at that price. It wasn't there. All right. My target is the close of today. So that hasn't happened yet. So I don't know what that would be. But your stop is 1.07758. That's your stop. Entry is going to be 7614. My bad. All right. So you're already at a 1-to-1. So this is Danny's current trade. Entry. Stop loss. Hopefully that didn't take him out or them out. Hopefully they took the entry after that moved back down, because that was the close. So yeah. Anyways, it's already a winning trade determined on by when the trade was taken. There is a 2-to-1 right there. So my rules would tell you to take profit now and then move your stop to break even and let the rest ride to see where it ends up. My long position currently has a trailing stop just under today's low. So if we make a fresh low of day, that trade will likely be closed out. But I already took profits on it. I took profits yesterday on the move up. I only move this. I generally don't move the stop when I take these trades. But with it being so close to the yearly opening range, and with CPI being today, I didn't want to lose most of the unrealized P&L that I still have. So I have a trailing stop resting right under one spot, 07152. But you're already at a 1-to-1, a 1-to-2 risk to reward. I would be taking profits. Nice job. Run Mountains made money on a long 21.545. Take profit 2/3, 21835. Stop to break even. Good stuff. And yeah, looks like people are just making money. Good stuff. Good stuff. Do I offer relationship advice? No, I do not. No, I do not. If I were to offer relationship advice, it would be to just communicate, right? If you're already in a relationship, you must communicate with each other. No lying and all that stuff. And you should be good to go forever. What's your call for the day? Just logged on. We were looking for a short on Bitcoin. We were looking for a run above the high of day. I had a limit sell setting above, not the high of day. It was the weekly high. So it was above yesterday's high. We had a limit sell at 21,903. And our take profit was daily support right there. So you can see here, this is the news candle. When it pushed up, it did not trigger my entry. It did not trigger my entry. My entry was above 21,903. So I did not get filled and I did not market order in because it happened way too quick. I mean, literally, if I go to the 1 minute chart, you're going to see, I mean, this thing just boom, 8:30, 8:29, 8:30, boom, drop. So 1 minute before the news came out, I thought I was going to get triggered. And the news came out and it instantly dropped. It just, so, I mean, the whole trade took 2 minutes. Unfortunately, it did not fill me. Did not fill me. So naturally, I'm not going to chase price now. But we are watching daily support still, John, to see how today closes. All right. If we close under daily support today, then we're going to have to wait for Bitcoin to find a lower support level. I am still in buy the dip mode. But obviously you are below the 50, which is concerning on the daily time frame. That's concerning. I'm not afraid or worried. It's just a little bit concerning. It's because Bitcoin has lost its risk on correlation again, whereas S&P 500 and NASDAQ were bullish yesterday and the previous day, or this morning and yesterday. Bitcoin was not. It could be all the FUD that's out there right now surrounding cryptocurrencies and Bitcoin, but this is very concerning, to say the least. So we're going to be waiting for it to find a new support. Where could that be? Well, you got an old resistance level right there at 21,203. So I would say that at the very least would be the next place to watch to see what happens. I wouldn't just blindly get long on the first tag of this price, because if you do that, you stand a really good chance of getting ran over. But this CPI number didn't really come in super hot. I think the market, there's a small chance that this could be faded here at 9:30. Right now you got the market open. So let's see how the market plays this out. We got a new fresh daily low on the SPOOs. NASDAQ looks like it's going to be a sell today. You can see your point of control situated right at the daily open, and you are getting a bearish push. The DXY has given back all of its losses. The dollar once again coming back up to test resistance, as well as the yearly opening range. We shall see if it fails here or not. If it does not, if you get a breakout, then naturally we're going to be looking for risk and Bitcoin to go lower, to look for that lower support. You are currently trading into a potential support on NASDAQ. I do not like the fact that you're trading this far under your point of control. And I do not see any new current spikes in volume at the lows. So it does look like the market wants to trend lower today, which is good for Danny's short position. And anybody else. That's if it plays out like that. Let's see if we see any buyers popping up on Bitcoin. Nope. Same thing. Point of control roughly around the midpoint of the daily range. And down here on the lows, you can see these volume nodes here. They are not spiking. If a low is going to be put in, you would want to see, these things growing, getting bigger and bigger and bigger and bigger, suggesting that new positions are being put on down here. And that's not occurring yet. And I would expect that to happen if I was looking for support. But there's daily support. So if you wanted a chance being a buyer at daily support, 21,628 is daily support. You could throw a stop under your daily low, which is right there, 21,548. So that position would look like this. Obviously, you would just be looking for resistance. If you were playing the day, the whole day and nothing but the day. So that's what you would be looking at. Something like that. All right. Now, I'm not telling you to do that, obviously. But if you were bullish and you thought if you thought this support was going to hold on the daily time frame, that's how I would play it. We can play it like that if you want. But I don't want to lose money, as I'm doing pretty good on the week. I guess I could afford to take a 0.5% loss on it if I'm wrong. It is daily support after all. I just don't like this. I don't like that you're not getting any volume down there. And it seems like on these live streams, when the original position don't work out and I end up taking the opposite side of the original trade, they usually get stopped out. You know what I mean? Because, well, that's called chasing price. And I advise you not to do that. But that's daily support. So if you are looking to go long, that's a way you could do it for sure. But don't buy it up here, as that drastically changes your risk to reward. You see that? You got to buy it down here, not up there, down here. Remember, all the other markets look bad. S&P 500 not really. But let's go see if we got any other support levels here. We know we got one on the NASDAQ here, being a Heath level or a demand zone right there. There's your Heath level on the NASDAQ. So similar to Bitcoin, the NASDAQ does indeed have a support level there. Now, whether or not that holds is a different story. The dollar is rejecting at resistance. The S&P 500 never tested yesterday's open. So as far as, this being faded is still a possibility. You do have an old support on the S&P 500 there at 41.12. Right there's an old daily support. There is nothing there intraday. Nothing. You have an intraday demand right there. Chances are you're going to trade right back up to the point of control, find resistance, and roll back over. If this is going to continue, right? If the current daily trend is to continue. If you get under the daily open on the dollar, I think you do have a chance of that occurring. Or let's say if you get back under this support on the dollar. That's a pretty nasty looking hourly there, bub. So I mean, you're definitely trying to trade against the intraday trend and the intraday momentum. You did make a low relative to oversold on the 5 minute, but I mean, we don't really care too much about that. Let's see where we are in the line of volatility or mean reversion. Your mean reversion says that you're at the low, not you're at the midpoint, and the near term on the hourly is lower. It's moving lower. This just means that volatility is moving lower, right? This is not a directional bias indicator. It just shows you mean reversion. But on the longer term does look like a trend reversal. This is your low. So what you would need to do in order for in order for Bitcoin to look like support has held, I would want to see it make a fresh high up in here by taking out this daily swing high there and then finding support. That might be the better play to wait for instead of buying today's daily support. Wait for Bitcoin to actually show us that higher high and then look to buy a pullback. Because right now, the waiting and the everything is against you. Volatility is against you. Momentum is against you. Yeah. But it is daily support until it isn't. That's how these things work. Um, let's pull up the S&P 500, see what it looks like. No, I want that off. S&P 500 looks good. Yeah, see how the S&P 500 just pulled up to the top of the mean reversion channel and it's finding resistance up there? Technically, the S&P 500 could pull all the way back down to here and still remain bullish. So being a buyer on the S&P 500 up here means technically you're buying the top of the range. And I'm a proponent of buying the bottoms, not the top, because you're looking to buy low and sell high, not buy high and sell higher. It does occasionally work, buying high and selling higher, but I'm not a huge proponent of that. On the Bollinger Bands daily, this is the 2 standard deviation. You could see that you're at the top of the range still. But you have been trading sideways for multiple days. So technically, the market could see that as a deep enough correction. You did tag the median line. You did tag 1 standard deviation from the high. So this being the high, coming into that orange line, that's 1 standard deviation. Move. And then you bounced. Boom. Typically, what we want to see also on the Bollinger Bands for an uptrend is we also want to see a compression on the bands. We want to see volatility decline. We can use Crown's Crypto Caves Bollinger Band percentile here. You can see that you are on the lows. The lows, the lows, the lows. This is typically what you want to see for an uptrend to sustain itself. Weekly, you're at the top. Now, that doesn't mean that you look for shorts, because if you back test this indicator, you'll see that in a bull market, you typically stay at the top of the range, right? Only on pullbacks do you even get one standard deviation away on a weekly time frame. You can see the last time you got that one standard deviation pullback was here, and it wasn't even a whole deviation. It was like a half. A Bitcoin is holding support for now. It's still trading up. You're back up to 21747. The buying daily support might play out. Daily support. Yesterday's high. This right here could end up being a new support. If Bitcoin closes higher than this today, and like I said, if you do get the expansion, take out this swing high, then what you can look for would be something like that. Right? Which it would actually be this. Depending on if this closes above this price. If it stays under this price, then down here is the support. You see what I'm saying? Because support moves up. That's what you want to see. You want to see supports moving higher. Every now and then you'll get these bear traps like this where you do get a lower support and then the explosion happens in price. But like during normal standard trading, you want to see your supports moving higher. Up, support, up, support, up, right? This was a short squeeze. A pretty vicious one. Capitulation has already happened. Accumulation happened here. We went over this. We can go over it again. Not that. Let's do this. All right, so if you're not familiar, this is Glassnode. It just shows us on-chain data. If I show you the addresses with a balance of 10,000 or higher, apologies on the blower if you hear it. I've told that guy 30,000 times to stop doing it when I am live, but he doesn't listen. All right, so right through here is the important part, the important stuff. So this is when FTX happened. You can see that those addresses of 10,000 Bitcoin or more got a big spike. And look how long the spike lasted. So you're looking at this low here and this low here. You can see that the orange line from there to there went up, this move up, and then the decline. So that's this section of price. If we go into the accumulation trend score, we get rid of this indicator. You can see here is that accumulation happening right there. So a lot of accumulation happened after the capitulation. And then right now, there's not a lot of accumulation happening. Bitcoin just took off to the moon. Bitcoin just made a fresh high. I told you at the open, every bit of that CPI move could get bought into, and it did. So now what we'll be looking for moving forward is a retest of 21,789. This becomes our new support to look for buying opportunities. Okay? Because you just did this. You just did what I said. Right there. You just took out that target. So now I do not want to see any daily closures under 21,789 spot 80. As long as 21,789 spot 80 is holding as support, this will be the price at which I am looking to be a buyer moving forward. Make no mistake, I am in buy mode on Bitcoin. The earlier short was just to scalp the volatility. That was it. I have a long bias on Bitcoin and the rest of risk assets. It is a BFTD market. Bitcoin holding support so far as well as equities. This was posted 2 hours ago. If you're not following me on Twitter, it is trade_talk_ at trade_talk_. Make sure you're following the right one, because there are people out there pretending to be me. I don't know why, but there are. I have 4,500 followers. Make sure that it is this one. I'm following 137 people. This one. 1_1_. Trade Talk, all caps. But I posted that just 2 hours ago. Bitcoin holding support so far as well as equities. We do have CPI this morning, but so far it feels like a hashtag BTFD market, which just stands for buy the Farfignugan dip, which has been my position for months now. With that being said, Bitcoin did lose a 21 EMA. Just could be from all the FUD, right? Boom, shakalaka. Now, you're not seeing that move in the NASDAQ or the S&P 500. So maybe that correlation's coming back. Maybe they're ignoring the FUD. That's a nice move, Bitcoin. Good job. Good job. We like it. We like it. Yeah. What's your stop loss on that short limit order? I didn't get filled, so I didn't take the trade. Tesla short. No. We're not looking for short positions. We are buying, guys. Buying. We are looking for buying. We're not buying the top, though. Okay? We're not buying the highs. We're waiting for pullbacks to support, and we're buying support. Tesla is not a short. I seen news yesterday. Somebody, Ray Dalio or somebody, just bought a ton of shares on Tesla. He's all right. So you don't want to short. If you must short, maybe short $200. I don't know. I wouldn't if I were you. That's quite a bit of momentum there. But if it is going to be a short, 201.29 is where I would expect that to happen. Damn you, Bitcoin literally didn't even give me enough time to get in that long. The market is pricing in no recession, right? The market is in bullish mode. So while it's in bullish mode, how I do that typically is I'll go out, right? Like at 1 to 2, whatever I'm risking. What am I willing to risk on that trade? The same way that you can use the trading views tool or whatever. When I'm watching the marketplace, sometimes I don't want you to do things like, you know how to analyze, how to manage your risk, right? That's what's important. I don't want you to do exactly what I do all the time, because my circumstances are different than yours. This is what I do for a living. So I'm sitting here at the desk all day, managing, watching everything all the time. I have multiple monitors watching all markets. I usually have several trading platforms open at once, several brokers. My stop loss on that particular position, because I have closed it. Let me see if I can find it. 21,940. It was a 2-to-1 risk to reward. I think it said. I mean, I don't understand why it's even why it would be relevant anyways, but that was the weekly high right there. This was my target. So with limit order was setting roughly right in there. It would have looked something like that. Right? 22,049, not 22,094. 22,049. Something like that. I'm always looking for at least a 2-to-1. CPI News Original. They bought daily support. Look at this. No volume down here at all. And you get this move. This is why these kind of indicators are not used to take positions. We use price and price alone. But they can definitely help. But yeah, back to your Tesla short. You don't want to be shorting Tesla right now. You don't want to be shorting anything. You want to be looking for buying opportunities, and there is none now. The buying opportunities happened yesterday on the S&P 500. Yesterday was the buying opportunity, and it was at 40.88. A buying opportunity on Bitcoin today was daily support 21,628. But I didn't take it. Moving forward, we'll be watching this 21,789. As long as we're not closing dailies under here, this is where we'll be looking to enter fresh buying positions. I mean, guys, listen. The longer you spend time holding a support, the better it is, right? The better it looks. There's multiple days here of Bitcoin holding support. This right here liquidated that low and then traded all the way back up and held support from the previous day. So this will end up being in study charts. 1, 2, 3, 4. This is day 5 that you are unable to close below 21,628. Everybody's bearish, and they shouldn't be. We've been bullish for weeks, months. You got to look for buying opportunities. Doge. But not today, not now. I mean, obviously, the trade is past. And do not look to short that. Yeah, Dogecoin holding support as well. Support, support, support. Notice you did not liquidate the swing low on Doge. And today it was support. Intraday supports. Not really. You broke support on Doge there. And Doge doesn't look as good as Bitcoin. Like Doge isn't got the same like amount of strength that Bitcoin has right now. Ethereum is up 3.39%. Bitcoin is up 1.96%. So ETH is outperforming Bitcoin again. But only today. Only today. Bitcoin was outperforming Ethereum. Today it's the opposite. Nice move Matic, please. Yeah, let's go look at Matic. Shoot. Looks good. I mean, it's had a lot of accumulation in this zone here. Games were played right there, that's for sure. Random market violence is what we call that. Random market violence, that's all it is. Nobody survives when stuff like that happens. But I don't know what level this is, but it held as support. It's just some old random weekly swing high. But you held daily support on Matic. Held. You're trading as an inside day today, but if Bitcoin continues to go up or closes strong on the day, I suspect ultimately this will close higher as well. I would not try to short it. Right now, it is at a technical level where if we were bearish, we would be looking to short right now. But we are not bearish. So we are not looking to short right now. I mean, but you can see how this hourly candle closed right under that. So, I mean, these levels get respected for sure. But we're not bearish. We're bullish. We're looking to buy supports in the uptrend. You are in an uptrend. Remember, Matic looks good structurally. Structurally, Matic looks better than Bitcoin. Your 21's above your 50, your 50's above your 100, your 100's above the 200. And you're getting space, more and more space between the averages. That's what you want to see in a bull market. You want to be a buyer when everything is nice and tight and hold on for the expansion, for the widening of the ranges. One spot 1813 was daily support, still is daily support, still holding. So if you do get a retest back in that area, which I doubt you will, but if you do, you could potentially look to be a buyer of it. But on Bitcoin, it does look like the weekly low is probably in. So this is also going to be the weekly open. You like to see it, man. KDA. Is that a stock or a crypto? Had a good month last month, and it's bullish. There's your yearly outlook. Year to date, you're bullish. And if you go from the yearly open, like if you just fib the yearly open to the yearly high, you can see where you pull back to. And the deepest support is there. As long as you're trading above 0.9965866, I like it higher. This one, however, is not structured bullish just yet. It has work to do. So I don't like it as much as I do the other ones that are already structured bullishly. But most cryptos trade with Bitcoin, most of them, not all of them. And they're not trading like 100% inversely or correlated to Bitcoin. But a lot of the same liquidity providers that are in Bitcoin are also providing liquidity for the rest of the crypto market. That's why they all look so similar. But your opportunity to be a buyer on this will be 1.0496. And I would watch daily closes. A close under it means you're testing the 99 spot. So wait for that. You're getting the move though today, so this is good. You're just barely trading above this price. So I don't know if I would want to be a buyer here. There's not much liquidity in this, so be very careful. When you see big gaps and weird looking stuff like this on the candlestick chart, it means there's not a lot of liquidity in it. So you can get slippage and all kinds of stuff. You said short, but Bitcoin is up. We were shorting the intraday volatility. That is all for the day trade. Horcrux. You are not listening, or you are only listening to the part that you want to listen to. Alls we were doing was shorting the volatility from the newsprint. That's it. We are buyers on Bitcoin. Go back and listen to the beginning of the video. The short was for today only. For a trading opportunity for today only. We were watching daily support to be a buyer. I said this price, I don't know how many times today. 21,628 was my take profit level on the short. Why? Because this is support. Maybe you just don't know that much about trading and I confused you, but dude, I've been bullish since June on this asset. You can be bullish on an asset and still take short intraday trades. It's simple. I can hold Tesla shares long, okay, and still make money by selling or by shorting it by using options, right? There's no difference in what we just did today or what we're talking about here. You can be long an asset and still make intraday money to the downside. That's why futures exist in the first place. On the Bitget platform, I have a USDT M futures. I have a Coin M futures, which is a perpetual swap inverse contract, and USDC futures. I have 3 futures accounts. 2 of them are currently long. One of them I leave open for intraday opportunities to take intraday longs and intraday shorts because I trade daily. I am a long-term investor, but I also take advantage of intraday volatility. Hopefully that explains it and clears it up for you. Now, but with that being said, did I know Bitcoin was going to go up? No, I did not. But I set up a long trade for you right here, not even an hour ago. You must have not been here when I said you could buy right there, use today's low as the stop loss, and take profit there. Maybe you didn't see this part. Maybe you didn't. Maybe you didn't hear the part where I said this move lower will more than likely be faded at the open, meaning they will use this volatility to buy it at the open, 9:30. If you start trending under it, then it's probably going lower. I don't know what price is ever going to do. What I am doing here on this channel is showing you the levels to watch. It's going to be your decision whether or not you take the opportunity. I'm not going to tell you to buy here, sell here, buy there, sell there, take profit here. I'm not doing that. We have been bullish Bitcoin. Very bullish. Don't be buying it right here either. No. You want to buy support. Yeah, it's too late to buy now, for sure. Absolutely. If you buy Bitcoin right now, you're probably going to lose money, especially if you buy it with leverage. If you want to buy Bitcoin with spot and hold it long term, say 5-10 years, yeah, you can buy it right now. Just make sure you do that with an amount of money you don't care to lose. I think Bitcoin will be way more expensive than $22,000 in 5 or 10 years. Where's it going to be next year or tomorrow? I don't know. And I don't know that it will be more expensive in 5 or 10 years. I just think it will. We have a bullish bias on this asset. I am holding 2 current open long positions from 16,500 bucks. This yellow line down here, this is my entry. That's the day I took the trade right there. And that's the price I took it. And I took it on 3 accounts. All 3 of those futures accounts. I closed the USDT side out up in here. So that way I could catch some pullback opportunities on any volatility to the downside. All right. There's so many strategies that you can do with futures and spot Bitcoin. You can be literally long and short in the same day, not on the same account, but on the same day. Bitget's not for US users anymore, unfortunately. With this all-out assault on crypto that the US is doing right now, a lot of cryptocurrency exchanges are going to be closing the doors to US citizens. It's going to be harder and harder for US citizens to get on, but if you're not in the US and you want to use the do exactly what I'm doing, there is a link in the description. Please make sure you use affiliate code XTSC. That is X-Ray Tango Sierra Charlie. Thank you in advance. But yeah, we like to buy it with leverage. We like to sell it with leverage. And the futures allows us to do that. The futures accounts. And with the Bitget, you'll get 3 futures accounts. USDT, the inverse swap, and then a USDC futures. There's only a couple USDCs that you can trade right now. They've added to the list substantially, but they're like the majors: Bitcoin, Ethereum, XRP, BCH, EOS, LTC, Uni, Link, AVAX, Ethereum, and then some other ones. I don't know what those are. BTC USD 0331. I have no clue what that is. I would have to look into it. Oh, wait, no, I'm wrong on that. I was looking at the Coin M futures. Yeah, with the USDC, you can still only trade the Bitcoin perpetual and the Ethereum perpetuals. Perpetual just means that it doesn't close on the funding rate. When the funding rate ends, it's a continuous trading contract. It doesn't ever close, which is fantastic. The settlement, though, is every 8 hours. Nat gas price oversold enough for a reversal. Let me go look. I currently have a long bias oil. even though we're trading under the yearly open, I think the China reopening will help demand. I think you're going to see higher oil prices, maybe. Um, Let me get on oil though. I do currently also have a position open on USO with options, but you want nat gas. Is it oversold enough? Yeah, it's pretty damn oversold. I mean, yeah, it looks bad. I don't know if I'd buy it because naturally there's a reason why this is such a massive sell off in this asset. I would probably wait on weekly bullish divergence or something before I'd start to look for long positions. There's a ton of momentum in this, so it can still keep going lower. But you have formed a weekly support. You did test that weekly support. That weekly support is currently holding as daily support as well. So I mean, it just depends on what kind of an opportunity are you looking for. You can see how you just did this low here. That's not bullish divergence though. So maybe wait for that first. Let that liquidity run happen. So you can see this low here relative to price. Price is basing here in a very tight range, with this being your obvious low and your lowest low. And that corresponds with the RSI. See that? This candle. So what I would do is I would wait for bullish divergence to happen here. What that means is you will need to see a push lower on price and a close lower, and then a higher low on the oscillator. Then wait on support. Then look to be a buyer of support. So there's still plenty of time on nat gas. You don't need to be a buyer today and chase price up, because what's likely going to happen is that divergence. It's going to trap a lot of bulls. Then it's going to run down and stop out all of those early bulls that is trying to pick the bottom. Let that divergence get formed first. Then let a clear and obvious support build in, similar to this. Then you can look for buying opportunities. I think if there is going to be buying opportunities based solely on the price chart, no fundamental analysis in this at all, based solely on the price chart, I would probably wait on that liquidation before I'd be a buyer. Wait for price to make a fresh low. Then you can try to buy that low wick if you want. But be very careful doing that. The safest way is to do it like I said. Wait for divergence to build. Wait till you have clear bullish divergence. If you don't know what bullish divergence is, I can show you here on Bitcoin, because Bitcoin built divergence on the weekly. And it was obvious and clear here. And we'll use a line chart for this. So you can see the divergence here, there, There's a low, there's a fresh lower low. Well, on the oscillator, you made a low there. And boom. So there's your low. There's your low. Then you made a fresh lower low. Obvious higher low on this. That's bullish divergence. I would at least let something like that play out first before even looking, because there's a reason it's being sold off. You don't want to be a buyer on something when the entire market is selling the asset, because there's a reason they're selling it. And I don't know the reason because I'm not a nat gas trader. I do not trade nat gas and corn and stuff like that, like those kind of futures. I don't trade those. Not saying that the strategy won't work, it will, because I trade, Bitcoin futures. The strategy that I use on every asset. Forex, crypto, stocks, options, everything. I think the reason, which, I don't think nat gas in America would have anything to do with nat gas in Europe. I don't know if I have no idea why it's being sold off so viciously, but it is being sold off viciously. This also was another reason why why we started to get bullish, because all commodity prices were starting to get hammered. Commodity prices are really good indicators. This right through here, you're starting to see a dip happen on copper. Yeah, it works exactly the same. There's oil futures. USO looked bad. It gapped way down, but it's back above the yearly open. So hopefully that'll continue to go up, as I do have a long position on. You're welcome, Yuan. Can you one more time show me how you find the low on the day and the targe? TARGE. I don't know what TARGE is. Oh, and the target. Find the low of day and the target. You can use an indicator to find the low of day, or you can simply look at the candles. Okay, the candles show you the high, low, open, and close of every day. We'll use Bitcoin for this. But there's your low of day. Today. This is the current daily range. Yesterday's low of day is here. That's your low of day. Low of day. Right? It's just the lowest point that it's made as of right now. A low of day, like, they're not static. They can change throughout the day. There is an indicator that shows you the entire day's range all day long. So from the very open of the day, it'll show you where the low is, the current low. But remember, those lows can change. And that is simply the volume profile, the session volume profile. It's in indicators right there, technicals, the middle volume profile, and the one you see with the star, session volume profile. When you have that on and you're looking at an intraday chart, this box is your daily range. The top of the box is the high of day. That would be this wick right there. The bottom of the box would be your low of day. And that happened at the end of the day, yet on this day. So if you would have been looking at it earlier in the day, your low of day would have been different. You see, there's your low of day. So if you were setting up a short and you were aiming for this low of day, you would be looking for entries at resistance, and then you would be targeting that. And then you would be hoping not to be stopped out, which you would have been, because you made a fresh high of day here at the London session. There was a fresh low of day right there. Then you made another fresh high of day. So your lows and highs will change as the trading day moves on and on. Another fresh daily high there. Fresh low of day there. So you got to be careful. And then this is a new day's range, a brand new day. So I'm not quite sure what you mean by that. I mean, yeah, all you got to do is look at a daily time frame and it's going to show you the low of day. You just hover your mouse over the asset, and up here, L, that's the low of day price, no matter which candle you hover on. Low was 21,605.35 at the close. At the close, that's what's important. You bought a lot of Bitcoin at 21,500. Well, you're doing good. That's pretty damn close to daily support. All right, guys, I'm gonna wrap it up. Target, got it. Thanks. Yep, you're welcome. All right, if you guys got any more questions, I would go ahead and get them in because we're gonna wrap it up. We've been going for a couple hours. Bitcoin's basically already cemented its daily range. So now basically all we're going to be doing for the rest of the day is seeing where this thing ends up closing. S&P 500 still red on the day. NASDAQ red on the day. Dow Jones right on the day. So this move on Bitcoin is suspect. And you can see right now, that's why I said you do not want to be a buyer up there. Do not. So what just happened? Nothing. Just intraday volatility is all. This is the new daily support, though, that we will be watching. No, it is not. No. Let me take that back. There. 21,789 spot 80. We will watch to see how today closes in regards to this price here. If it closes under, that's not going to look so great. What we would like to see is a retest of this price and a bounce. We want to see bullish continuation. But it doesn't mean that you should be a buyer there either. I'm just saying watch that area. All right. Explain. Tesla is not a buy yet. We're waiting on support for Tesla. We went over Tesla earlier. It's finding resistance at daily resistance. $201. It's just finding resistance there, which is good if it wants a deeper correction. We want it to have a deeper correction. There's a big fat gap down here around 150s. That would be a very deep pullback if it were to pull back down there. But if it pulls back down there and finds support, that's where I would want to be a buyer on Tesla. Next potential support on Tesla, 166.66. So either here or down here is where I will start to look to be a buyer again. That doesn't mean just buy it as soon as it gets here. We have to wait, we have to see if price holds there. Like if you just blast right through that, obviously you don't want to be a buyer of that. We want to see support get built. But these are the two areas that we will start to look to be a buyer on Tesla. Can't buy it up here because a deeper correction is likely on Tesla. And then what was that? Explain 21,789 is a buyer's. It's not. Listen, it's not. It's not a place to be a buyer. It's a place to watch to see if it becomes support. You do not just want to buy there. You want to see if price tests it and holds it as support. And I don't mean 1 5-minute candle. I want to see a day trading in this area, or like at least a couple 4-hour candles closing, pushing under, closing above, push under, close above. Show me that it's support. Then we could potentially be a buyer there. If it comes back down here today, I won't like that at all, because you will have essentially given back the entire rally. of today. And that's typically not bullish. Bullish means you make higher highs and higher lows throughout the day. Going up hard and coming back down hard is never something you want to be a buyer of. But it's the next area of support. Johan, I have videos already explaining support and resistance. You just have to go into the channel and look in the beginners playlist. There'll be a video that says support resistance. It explains this stuff for you. There's a lot of videos, especially if you don't understand the concept of support or why it's support, that you should watch in the playlist. They're not long videos. That beginner series playlist does not have live streams in it. So they're going to be quick videos. There might be one or two that might be longer than 15 minutes, but most of them are generally, they're not hours long. They're just minutes. All right. You guys have a fantastic rest of your day. As always, make sure you guys trade safe. Make sure you trade smart. And happy trading, everybody. We'll see you again Thursday morning, closer to 9 o'clock if there is no news. Same time, or same channel at least, not same time. Thank you guys for being here as always, as your time is much appreciated. And we will see you Thursday morning.